Hello, everybody. It was a pretty uneventful day overall in the market, but still the negativity that has been prevalent out there over the past month continued today. As the Nasdaq sold off 0.35%, volume was lower than the session before, but it was still above average. And the reversal off the intraday highs was pretty ugly, not terrible, but once again, not bullish overall. So it still continues to be way too early to be trying to even attempt to calling a bottom here. Nasdaq 100 also down 0.32%. The NYSE down 0.47%. The S&P 500 down 0.07%. Big cap stocks obviously are going to hold up better here than technology-related issues. The Dow Jones Industrial Average down 0.08%. And unfortunately, the Russell 2000 continues to lead to the downside, down 0.56%. 963.90 is still holding on to the 955 lows, though, on a closing basis. So it isn't terrible. It isn't brand new lows, but it is further new 52-week closing lows. So not good at all. But there is some slightly positive news out there, but it could be more of an issue of flight to safety than anything else. And after being beaten up for a full year, it should be no surprise that the Dow Jones Transportation Average is actually finding a little bit of a floor since those lows on January 20th. Another pocket pivot point signal today, and I tell you what, that's two pocket pivot point signals basically within 2 weeks. That's a pretty bullish move right there. So if we continue to see positive action in the Dow Jones Transportation Average, and then let's say the Nasdaq has an up day tomorrow and then starts a fall through day, while I doubt it launches a brand new bull market, I can't even say that without laughing, all the overhead resistance is just ridiculous. We've gone over it ad nauseum. It still could lead to a decent rally, but once again, close-end funds, gold stocks, utility stocks, food stocks, insurance stocks, and tobacco stocks dominate my scans. Isn't necessarily a ringing endorsement. CINF, that's insurance, Philip Morris, tobacco. CSX is one of those transportation stocks, as you can see, trying to bottom. INGR is a food stock with HRL. You got BMS, which is actually a packing and container stock. So ATO, utilities, ORA, utilities. So that's what I continue to see, working out there. You got WDFC, which is a chemical stock with, ODC, which is building a base. But outside of that, it's thin picking. So food stocks, utility stocks, insurance stocks, tobacco stocks, gold stocks, which all had actually pretty ugly reversal today. A lot of these kind of moves, KGC, GPL, NGD, some pretty bearish moves there in gold stocks. So even they may not continue to run on the short term, but still overall the structure in GLD and gold overall, it isn't that bad at all. But GDX, pretty big reversal on strong volume, and that's 2 days. Kind of weird to see this kind of action. Like normally back in the day before QE, I know it was 8 years ago, I know, but you know what, I yearn for the good old days. Sorry. On an end-of-day basis. But back in the old days, you'd see a strong uptrend on strong volume, and then you'd see a lower volume pullback, base out around the 200-day moving average, and maybe we can pick up gold long in size. But instead, here we are trying to sell off on above average volume. So it's either lower volume uptrends or higher volume uptrends get met with heavier volume following the uptrend. Either way, it's not the greatest price action. There's very few stocks like TRXC out there. I mean, that's just picture perfect. Been watching it for a while, and it really moved today. But overall, besides this, it's kind of thin pickings out there. And you can see some of that ugly action. I mean, especially like in the more European bank stocks. Look at UBS crashing to a new 52-week low on extremely heavy volume. Credit Suisse crashing to a new 52-week low on extremely heavy volume, and then Deutsche Bank hitting new lows on extremely heavy volume. You got Bank of America hitting new lows, Goldman Sachs attempting to hit new lows, JP Morgan still, dancing around its new lows, Morgan Stanley hit new lows intraday. So overall, it's just not great price action. And not only that, following a nasty, ugly, gap down day in earnings, normally what you like to see is a stock stabilize following a massive gap down, like in LinkedIn, down 43% in 1 day. Instead, here we are 2 days later, and it's down, an additional 7%, 8% today. So that's that kind of action that just leaves, a lot to the imagination of what could still go wrong out there. You got Zen. Zen crashes 19%, but then over the next couple of days, it's down another 13%. Just that kind of follow through is really, really, really bearish. And let's look at ELLI. ELLI was one of the few stocks still qualifying for my perfect speculator scan. And following that move on February the 1st, it's been nothing but ugly price action. In the last 3 days, it's down 20%. Huge volume on the sell-off. This kind of action is just atrocious. It's really, really ugly. And then look at this REIT, LTC. Once again, another REIT that breaks out and then reverses, like Cube, Core, MAA. So more and more and more ugly price action out there. You got Panera Bread looking like it's going to roll over now on heavy volume. And as long as we continue to see this kind of reaction, even following even an earnings loss, you can be sure that this is just a price-earnings ratio. We're revising what we expect from earnings, I guess, over the upcoming year, because it looks like it's a PE reset overall in the market. Just a lot of ugly action out there. No reason to get super bullish or even look for a bottom yet. But the Dow Jones Transportation Average is hinting that if we start to see some strength in the overall market, we could see a little bounce. But like I said, so much resistance, so little time, it's going to be hard to go anywhere anytime soon. That being said, we actually do have another add signal in IDA. IDA was a brand new long position back on February the 2nd. It gave an add signal yesterday with a pocket pivot point signal. And today it's followed through with a breakout to new 52-week high on strong volume again. It also has another pocket pivot point signal, so it's back-to-back pocket pivot point signals. But what's funny to me is, and I guess it's because the moving average has moved up, it barely qualified as price volume BOP scan surge scan stock IDA. It was not confirmed in my price volume BOP scan today. Volume was slightly lower than the day before, but I guess that small drop in volume along with the uptick in the 50-day volume average allowed it to just miss that scan. So we're just going to add 0.5% for it being Cancellum quality. It has an 84 EPS rating, 94 relative strength rating. It's number 4 in its utility electric power group. So it's going to be a 0.5% add overall. And that is that. There are no sells. There are no covers. There is nothing even of entrance. I was actually thinking, I need to check on it, going short VHC. Not quite sure if I want to yet, but this is my best short candidate that I have the most interest in for an overnight long. I have to check with Interactive Brokers to see if there's shares to short, but it looks like we got a significant reversal. And this is one, like, I said, I don't like shorting unless I think that I can get a 50% return on the trade. And as you can see, VHC was almost up 100% since January 28th. So I'm looking for it to go from the 7s into the 3s, the 4s and the 3s. So if IB has shorts, I'll probably look to go short this name using 759 as my final buy stop.